I won't stop till I hear him say,
It's literally telling you right here, this is literally from the International Swaps Derivatives Association, that banks' exposure to crypto is currently limited. Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video breakdown, we're going to be going down the rabbit hole. We're going to be talking about the institutionalized adoption of cryptocurrency assets being utilized for payments and our payment infrastructure. I'm sure that the majority of individuals woke up today expecting some type of price appreciation in their crypto portfolio. However, come to find out the majority of the crypto asset and market space is actually down today, not by a whole lot, but across the board in comparison to the past couple of days, cryptocurrency assets have seen a depreciation in value in the past 24 hours. So we're going to get into that today. I'm going to give you guys my perspective of this whole ISO 222 trendy bullcrap that's going on. And we're going to dive into some fundamental documents. I'm going to share my perspective with you guys. As always, nothing that I constitute here is financial advice. Take it upon yourself to do your own deep dives. This is me just projecting information to you all that is readily available to every single individual to generate your own bias and opinion. Okay. When you really truly understand how these financial markets work, you will come to the conclusion that the majority of information on the internet that the mainstream individual can pick up on that's trending, as you guys can see, this is Twitter right here, right? And what's trending? ISO 222, okay? No price appreciation today. We saw massive influencers across the board boasting like we were going to see XRP, XLM, XDC, Quant, right? All these ISO 222 compliant cryptos go to new all-time highs today. Not saying that that's not a possibility in 2023, right? Could still be, but I'm going to show you guys how institutions right now are not heavily involved in the cryptocurrency space based off of some things that have been put in place by major banking institutions. And yeah, so let's start down this rabbit hole. I also have some video clips for you all today as well. So stay tuned for those video clips. Let's go down the rabbit hole. So this all started, I told you guys the other day, right? All the lost influencers waking up tomorrow to check to see if their crypto bags mooned because of ISO 222 going live, or 20022, whatever you want to call it, right? We get the gist. Across the board for the past, let's just say since the beginning of the bear market, 2021, individuals have been thinking that this whole go live date was going to cause some massive surge in price. And now that is now coming to fruition. Obviously, March 20th was the go live date, and that is not coming to fruition. Okay. Major price appreciations, all-time highs across the board. So we're going to start here on the tweet that I put out to you guys, February 26, 2023, where I said, people still won't research utility-driven crypto assets that will enhance our current outdated and fragmented financial infrastructure. And this was a BIS session where Nellie Lang was a panelist, market participant, or a participant in this panel discussion. You guys can see Nellie Lang here, where she goes on to say that they plan on utilizing cryptocurrency assets for payments in the future. Okay. Now, if you don't know who Nellie Lang is, she is the Treasury Secretary of Department of Finance. All right. So she's not just some willy-nilly, average individual. Okay, she's a major player. She has inside information, most likely, and she's telling you guys right here, this panel discussion that I had posted on my Twitter was literally only from like 5 months ago, so it's not outdated. All right. And she specifically said, actually, no, I'm sorry, not 5 months ago. This was actually recent. You can see down at the bottom. Let me just play it for you guys so you can hear what she said.
2023, and listen to what Nellie Lang has to say about the future of cryptocurrencies.
Since we think the future value of crypto is for payments and not for speculative trading,
all right, I don't know if you guys could hear that recording, but she said, since we think the future value of crypto is for payments and not for speculative trading, and she goes on. I apologize. I said that this was from a couple months ago. It's actually from a couple of weeks ago. I mistake that with another video recording. So we're going to get into that in today's video breakdown via another panel discussion from the Brookings Institute that Nellie Lang was a part of, and some of the things that she goes on to say. Now, this is all going to tie in as to why it is that I personally think that we have not seen an appreciation in cryptocurrency assets recently. And you guys, again, need to generate your own bias. I don't think that it's not going to happen. I'm very bullish on cryptocurrency assets overall that are going to revolutionize our payment infrastructure. But people really truly need to wake up and understand that they're always posting on the Twitter space. They're always posting on YouTube. Influencer. They usually don't know what they're talking about because they don't do this type of in-depth research. So let me give you guys my perspective, and then you can generate your own bias. So let's pay attention to what Nellie Lang has to say and a couple of other of these panelists from the Brookings Institute, where they discuss crypto digital assets in the future of the payments infrastructure. They're pretty much going to talk about new technologies running our payment infrastructure, distributed ledger technologies. They're going to talk about how the bad actors in 2022 getting whittled out of the market were an experiment, specifically saying that they were an experiment. And then I'm going to kind of dial in and focus your attention as to where we are currently at via this adoption curve in distributed ledger technology and digital assets, where we're currently at now. Okay. So listen to this little tiny video clip from Nellie Lang.
So to start, the first report that I want to talk about is crypto assets, implications for consumers, investors, and businesses. And the charge for this report was to focus specifically on current uses for crypto assets, and especially use by and effects on vulnerable communities. And a main finding of the report is that the most prevalent current uses of crypto assets are for trading, lending, and borrowing, and use of crypto assets to deliver other types of financial services like payments at lower cost, higher speed, and without intermediaries has not materialized yet. Has not materialized yet.
Okay, so I'll pause right there. So she said that the use of cryptocurrency for payments has not been materialized yet. Now, this was streamed 5 months ago, so this is where I got the mix up between the two, right? She said that the use of crypto payments, or the use of crypto for payments, has not materialized yet. What is crypto used for right now? Trading, speculative trading. Well, what did she say in this BIS panel discussion? That in the future, they believe that cryptocurrencies will not be utilized for speculative trading and that they will be used for payments, right? Piecing parts of the breadcrumbs together for you all. Well, she was on this panel discussion where she says that crypto assets are utilized for speculative trading and that in the future they will be utilized for payments, a BIS panelist discussion. So let's go over here to a fundamental. I want to show you guys how easy this is to figure out why crypto has not mooned to new all-time highs yet. All right. Central banks, this is a fundamental that came out from Cointelegraph. It goes on to say, central banks to set standards on banks' crypto exposure from the BIS. It goes on to say, the new standard limits crypto reserves among banks to 2% by 2025 and goes into effect on January 1st, 2025. Pay attention to this date, 2025. That's going to play an important role in a PDF that we're going to read later on. Okay. Now, it goes on to say, talks about this global standard for banks. Exposure to crypto assets has been endorsed by the group of central bank governors and head of supervision, or GHOST, of the Bank for International Settlements. The standard, which sets a limit of 2% on crypto reserves among banks, must be implemented on January 1st, 2025, according to an official announcement. So this is crazy because it's specifically going to be talking about XRP. Watch how I'm going to tie this in. It's pretty nuts that people don't know about this because their focus is, again, all on what's trending. ISO 222. Oh my gosh, we're going to see a pump, right? Ain't wrong. It's not going to cause a pump in the market. Let's wake up and really understand how these markets are manipulated and move, which they even talk about in this video breakdown. I'm going to show you guys how they literally admit that markets are manipulated. Okay. So this is that PDF that Cointelegraph was talking about via the official announcement from the BIS, where it goes on to talk about this restriction on cryptocurrency assets of 1% to 2% being implemented by January 1st, 2025. But what I really want to take your attention to is down here, where it starts to talk about different groups of crypto assets. It has them kind of segregated in group 1, and then it goes on to group 2, 2A, 2B. Okay. Now, a lot of people don't really truly understand where these digital assets fit into these groups. So let me break that down for you, some official documents that have done that in the past. So it says right here, Group 2 exposure limit. The proposed requirement for banks, let me zoom in so you guys can see this. The proposed requirement for banks to keep their aggregated exposures to Group 2 crypto assets below a threshold of 1% of their Tier 1 capital has been retained in the final standard, subject to certain modifications. This is where it's important. However, to ensure that banks have a strong incentive to not significantly, it says right here, not significantly exceed the 1% threshold of what? Their Tier 1 capital, a new 2% limit will be introduced, which, if breached, will result in the whole group of 2 exposures being subject to Group 2B capital treatment, right? So why am I reading this to you? Well, if we come over here to a very interesting document, okay, this is from the ICMA group, okay, and it talks about banks limiting their exposure to cryptocurrency assets 1% to 2% of their Tier 1 capital, right? And we heard Nellie Lang, who was a part of this BIS panel discussion, say that crypto right now is being utilized for what? Speculative trading, and that in the future it will be utilized for payments, but not right now. Check this out. This is a PDF, and it says right here, talks about Group 2B cryptocurrencies include, and I'll just focus in on XRP, right? So banks are limited right now. You guys can literally see that they're telling you banks' Tier 1 capital is limited to 1% or 2%, right? And what does that mean? That means cryptocurrency assets like XRP, which fall into a Group 2B sample, right? They're limited to that. They're limited to that exposure, right? So we'll move on. Not enough. Let me fully disclose. This is from the ISDA. If you're not too familiar with the ISDA, that is the International Swaps Derivatives Association, okay? If the BIS telling you this or the ICME group telling you this is not enough, check this out. It goes on to say, let me zoom in again. This is a little bit of a mouthful, and I know that this can be kind of boring, but if you're a real investor and you want to know why the cryptocurrency market is not pumped today based off of ISO 20022, you will continue to listen. It says the crypto assets market grew by 3.5 times in 2021 compared to 2020. It's almost $3 trillion as of November 2021. I believe it did hit $3 trillion if I'm not mistaken. But it goes on to say, despite a reduction in recent months, this market is increasingly attracting interest from institutional investors, banks, and policymakers. There is a growing number of new entrants into this crypto asset market, including hedge funds, banks, insurance companies, sovereign wealth funds, pensions funds, and endowment funds. That's a massive sentence right there, because it says, despite a reduction in recent months, all these market participants are still seeking to enter into the market again. Remember, this document mentions 2025. That's going to play an important role. Then it goes on to talk about the Basel Committee in Banking Supervision made proposals for the fraudulent treatment of banks' crypto asset exposure. So it's talking about this fundamental that came out from the BIS, right? They're addressing it. And it goes on to say, if that announcement is implemented, okay, it would lead to particularly punitive capital requirements for banks holding some types of crypto assets and disincentivize trading financial intermediaries from playing an active role in the crypto markets. Boom. It's literally telling you right here why banks are not utilizing crypto assets just yet for payments. It says right here that this whole entire rollout of this official announcement by the BIS is doing what? It's leading to particularly punitive capital requirements for banks holding some type of crypto assets. All right. And now moving forward, it goes on to say, this is directly from the ISDA.com or .org website. It says the industry supports the BCB's decision to engage related to the prudential treatment of crypto assets. At the same time, the paper calls attention to the need for prudential regulatory certainty in the near to medium term, particularly given the pace of evolution in client demand for crypto assets. As the BCBS notes, banks' exposure to crypto assets are currently limited. Right? Despite the fact that crypto assets have grown exponentially over the past several years, however, the limited exposure is neither desirable nor sustainable in the view of the industry, and the fraudulent framework envisages, and these are big words, envisated, I'm going to butcher that one, by the consultation would create material impediments to regulate bank participation in crypto markets. So it's literally telling you right here, this is literally from the International Swaps Derivatives Association, that banks' exposure to crypto is currently limited. Why? Again, because they can only plug in a certain amount of their tier one capital to specific crypto assets. And I focused right here on XRP because a lot of the people that watch our content here at CYPRX are XRP enthusiasts, okay? So when you're thinking that the cryptocurrency market is going to pump, be patient, understand the long-term vision. We see these long-term dates like 2025, 2027, and so on. But people, because we're so accustomed to want immediate dopamine fixes and quick gains and quick results from the market, they get hooked on these influencers that draw Fibonacci's on their charts and tell them massive price predictions are going to come into fruition overnight, okay? Understand that banks, as of right now, have limited exposure to crypto assets and that they're not being materialized, crypto assets specifically, are not being materialized for payments right now. That's not to say that in the future they won't be used for payments. Right now, they are utilized for speculative trading. And when you understand that, you will get off of this whole bandwagon ISO 222 bullcrap and understand that, yes, in the future, it could play a massive role. But right now, as of today, March 20th, it did nothing, okay? You guys kind of get what I'm going? So now that the negativity is out of the way, let's get back to the positive side of this panel discussion right here, where we go on to talk about new technologies.
May rely on for a range of financial services. It could also lay out a path for non-bank payment providers to participate directly in its payment systems. The report's final recommendation prioritizes work to develop a faster, cheaper, and more transparent international payment system, while considering the potential risks of greater integration of cross-border payment systems. Indeed, private sector innovations have been driven partly by the inefficiencies in our current cross-border payment system. So to conclude, as laid out in the executive order, new technologies, when developed responsibly, can lead to significant efficiencies and further innovations. The Future of Money and Payments report.
Okay, so I'll pause right there. She goes on to mention the private sector.
Indeed, private sector innovations.
And she goes on to mention new technologies will pretty much revolutionize our payment infrastructure, okay? Now, that plays a massive role. Let's go over here to an interesting fundamental that came out in June of last year, 2022. This is where, when I told you guys to pay attention to the year 2025 plays an important role, okay? So this report goes on to say 75% of retailers eyeing crypto payments within 24 months, right? Nellie Lang just told you, not only in one panel discussion, but in two panel discussions, along with the BIS, that crypto is not being utilized for payments right now. But that's not to say it's not going to be utilized in the future for payments, okay? So pay attention. Remember, this article came out June 9th, 2022, talking about payments in the crypto space being utilized in 24 months. So down here it says, a large majority, around 85% of the surveyed merchants said they anticipate that cryptocurrency payments will be ubiquitous in their respective industry within 5 years. So let's go over to that Deloitte fundamental, that PDF from Deloitte, where it goes on to say, surveyed respondents are very optimistic about digital currencies in the consumer market, reporting broad agreements that accepting digital currency as payments is already a point of differentiation and are expected to see broad to near-term adoption. And then right here, this is where it gets interesting. It says, nearly 3/4 of those surveyed reported plans to accept either cryptocurrencies or stablecoins within the next 24 months. Remember, this PDF came out June 2022. So where would that put this prediction at? Towards the end of 2024, towards the beginning of 2025. Do you guys see why the date 2025 is important? It's across the industry as a whole, as when it's expected for cryptocurrencies to be utilized as payments and not speculative trading, which is what these regulators, these entities like Nellie Lang, okay, or the BIS are telling you crypto assets are being utilized for, right? They're literally telling you in their documentation that banks do not have a lot of exposure to crypto assets currently, right? Moving on, This was also interesting. This is a connected PDF to this Deloitte PDF, where in this little tiny Nellie Lang clip, she goes on to mention new technologies. Okay, so now let's focus on that vocabulary, because right here from Deloitte, it goes on to say, the shift to electronic payments has been a significant driver in the decline of cash. New digital technology is replacing the old physical technology, enabling us to buy online far-flung merchants. The assumption is that while cash may disappear, the manner in which we pay will remain largely the same, with customers and merchants exchanging value at the point of sale. Then right here, it goes on to say, the new technology replacing the old digital technology, however, enables us to do more than remove pain points and extremes existing practices. Then now let's go on to where it talks about XRP, specifically in this Deloitte PDF, where it mentions new technology. It mentions two cryptocurrency assets, and that is Bitcoin and XRP. Okay, it says XRP is the key technology in the overall Ripple solution. And down here, it goes on to talk about how XRP can be used as a bridge currency to facilitate exchanges between two currencies not commonly traded. So we know that new technologies are going to be utilized for our payment infrastructure. You want to be paying attention to the documents that talk about new technologies, and XRP is one of them. Moving on, we also have a document from the IMF. We'll flip over to Hedera Hashgraph, where they mention Hedera Hashgraph as a new technology. It says right here, before adoption happens, this is a PDF from imfconnect.org. Before adoption happens on a large scale, blockchain transactions must become more scalable and efficient. So it's literally telling you from the IMF what needs to happen before these technologies start to revolutionize our payment system, which is the phase that we're going through right now. What are banking institutions doing right now? They're not utilizing this technology fully yet with their tier one capital. They're testing, okay? They're in the walking phase of this blockchain technology, of this distributed ledger technology, okay? It goes on to say, new breakthrough technologies seem to be on the verge of delivering just that. For example, Hedera Hashgraph being one of them, all right? So in correlation with Nellie Lang saying that new technologies are going to be what run this new cross-border financial infrastructure, okay? It's just interesting that you can find documents that both mention XRP and Hedera Hashgraph as these new technologies, all right? Moving on, this was also interesting. This is from the federalreserve.gov website, and we know who the vice chair of supervision, Michael Hbar, is. He was an ex-Ripple advisor. And if we scroll down here to the part where he talks about distributed ledger technology, he goes on to say, proponents claim that distributed ledger technology, encryption, and new ways of validating transactions could be used to facilitate faster reconciliation, clearing, and settlement, and reduce costs for a variety of traditional asset transactions, including, for example, now let's pause right there, where he says, could be used, okay? The vocabulary that these individuals utilize is everything when you're trying to figure out, look at your crypto bags and wonder why nothing has happened to your portfolio yet, is the vocabulary that these individuals use. They could be used in correlation with what Nellie Lang said, is that in the future, crypto will be used for payments. Right now, they are not. I'm telling you guys, when you understand that, it'll literally change your perspective and give you a longer term vision. Okay, so it goes on to say, for example, by linking securities and cash markets in ways that are more difficult to achieve under our current financial infrastructure. Remember how Nellie Lang said that private sector participants have flooded into the space due to our outdated and fragmented infrastructure. That's why private sector market participants have come into the space, because they've realized a need to transition our whole entire current financial infrastructure. Goes on to say the use of smart contracts could automate certain actions, creating further efficiencies, such as the use of technology could lead to potential operational efficiencies and reduce costs. Then it says the Federal Reserve has dedicated considerable resources to exploring and understanding these technologies and their potential benefits, as well as the risks associated with these innovations. So again, they're telling you that they are testing this technology. They're starting to research it. They're starting to figure out what's going on. However, it all already exists. All of it. It all already exists. They just have to create some type of catalyst to transition everybody over, which we've gone down the rabbit hole in previous video breakdowns, okay? So moving on, let's go back to some other interesting video clips of this panel discussion from the Brookings Institute that Nellie Lang was a part of. This is where just specifically I have 3 more video clips. We're going to talk about how they mention programmable money being used, not today. tomorrow, specifically focusing on the future. Then they talk about the bad actors getting witted out of the market space and how they were all experiments. And then the last video clip, it goes on to talk about how the only thing that will drive institutional adoption and massive amounts of money into this space is regulatory clarity, and how these payment infrastructures, these systems, this new technology already exists. They're just waiting to implement it. Okay.
And I remember when I was might have actually been middle school, or maybe high school, when I got on the internet for the first time and I tried to read a news article. It's probably like, well, why do we need this? We've got paper magazines over here. And yeah, it was maybe a mild improvement, maybe not, because you had to tie up the phone line to dial on. It was sort of a pain. That doesn't mean that wasn't an important step to getting to a point where, right now we're on this path to having programmable money. And I agree, it is not used for payments today, but that doesn't mean it can't be used on a wide scale for payments tomorrow. And I think there's
boom. Okay, right there. So she goes on to say that we're on this path to programmable money, and that just because it's not being used for payments today does not mean it won't be used for payments tomorrow. So let's just pause right there, and I want to take your attention to this little tiny display, this chart. You need to understand that we are down here right now. Okay, we're in the early adoption, maybe early majority adoption phase, where this technology is still in the testing phase. Okay. Just because Bitcoin's been around since 2008 and it seems like a long time, that's nothing when it comes to the financial markets that have been around for years, okay? Decades on decades, right? If it's going to be a slow, long, drawn out process, there's going to be ups and downs. There's going to be bad actors that get witted out, all right? So pay attention to what they say about the bad actors.
Is initiated or some type of complex transaction when certain conditions are met, that's something that's not available today. So we do think it's worth it, but I agree, it's not something that everybody is using today. I would say in response to Treasury's reports, listen, I'm not going to sugarcoat it. The crypto industry, because it is early, has had, a rough year, right? There were some really bad things that happened in the marketplace. And, I'm glad to see that some of the bad actors are getting weeded out, and some of the crazy experiments that should never have gotten that big are going away, because those aren't good for consumers. And we certainly don't want that to be what crypto is. We think it's a much, much broader thing. And so,
right. So she said that we think crypto was a much broader thing, and that they're happy that the bad actors, the individuals that were experimenting in this market, are starting to go away. So that's, again, another little tiny gem that I thought that I'd add in there. And then this is the last little bit of this video clip for you guys.
Manage the reserves. We want to see more consumer protections in place, because I don't think we're going to be able to get to that next level where this is utilized as a payment technology until we have that regulatory framework. So I think we need the regulation. But what we have that some of these other ideas don't have is the technology is here. It works. It can be deployed. We don't have to go through the process of trying to build a new system. The system exists, but we just need to have the right framework so that we have more, sort of regulatory framework, so that the
Boom. I don't even know what else to put into this video. She literally said that the system, the technology, it already exists. But what they need in order to put in place is regulatory framework. Why do you think Ripple's being sued? Come on now. Why do you think XRP is being targeted? Come on now. It's all a part of their elite agenda. Okay. It's all a manipulative scheme to manipulate the markets, to trend things like this that are right now irrelevant in this market space, to fill the market with more exit liquidity in the meantime via market manipulation, so that way long term, when they really do flip the switch, the people that paid attention to the detail, the people that don't get witted out, the people that don't get distracted via all the mainstream influencer bullcrap that floods this space, are the ones that come out on top. Okay. Last but not least, all right, I've talked to the CYPRX students about this in past video breakdowns. Now I want you guys to pay attention. We know dollar strength is still relatively high. Okay. I think that in the next couple of months, we will definitely see the dollar strength diminish surrounding some very interesting fundamentals that have come to light. However, I just want you all to pay attention, and we'll look at Bitcoin and XRP as comparison to the US dollar strength during the last bull run. All right. So I want you guys to pay attention to psychological levels. And that psychological level on the DXY during the last bull run was that both times Bitcoin went on parabolic runs. We have all the way back in December, October, November, December timeframe. Okay. 2017, when Bitcoin ran all the way up to almost 20K. All right. Look at where the dollar was. The dollar was below the 93 psychological level threshold. All right. Then again, when Bitcoin went on a parabolic run in 2020, or started in 2020, collectively speaking, it started in the beginning of 2020. But when it really broke out and ran all the way up to roughly about 64,000 before retracing and then creating its all-time high at roughly around $69,000, look at where the DXY was at in correlation. Okay. Again, what started that parabolic move was when the DXY broke that 93 psychological threshold. Well, look at how far away we are from all that. And think about everything that I just explained to you. The markets move in tandem with each other. So all the fundamentals that I just explained to you will all start to come into fruition as the dollar starts to depreciate in value. Watch, mark my words, that the next time we see a major bull run, again, this I could be incorrect, but we'll revisit the charts again once we see major new all-time highs on crypto come into fruition. And I guarantee you that this US dollar, when those new all-time high prices in the crypto market come into fruition, this US dollar strength will be again at this psychological level, 93.00. I can almost guarantee it. So, I mean, think about that in terms of time. Understand that this is not just going to be a straight down shot move. There's going to be trials and tribulations along the way. But when you understand how the markets work, you understand everything that I just presented to you all, and you understand that the banking institutions are testing this technology right now. They're not actually utilizing it for payments just yet. You will understand why the market did not pump today during the release of ISO 2022 go live data, whatever the case may be, blah, 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 right? So if you enjoyed this video breakdown, again, smash that thumbs up button, subscribe, generate your own bias based off the information that I showed you all. Try to give you guys the realest information here and not fill anybody's head with a bunch of smoke and mirrors. Okay. I still have a firm belief in the future of digital assets, especially the ISO 222 or 20022 coins, right? XDC, XLM, Hbar, XRP, things of that nature. All right. But you really need to truly understand that the majority of the masses, the individuals out there in the influential space on YouTube and Twitter, they're also manipulated sheep at the end of the day. Okay. So blessings to you guys all. As always, be cognizant, be aware, and I'll see you guys in the next YouTube video breakdown.
I won't stop till I hear him say